Latin America is very far from most geopolitical fault lines. So why is everyone suddenly talking about it? After years on the sidelines, the region is making headlines again and outperforming global markets. What is driving this comeback, and where are the opportunities for investors? Find out now on UBS Trending. Hi everyone, I am your host for today, Amantia Mohedini, and I'm here in the UBS studio with my colleague Alejo Cherwanko. Hi Alejo, great to have you. We're going to talk about Latin America today, very far physically from the current headlines, where there are geopolitical fault lines, conflict. So let's take a step back here, come onto this side of the hemisphere in conversation. Tell us a little bit more around how this distance from conflict is showing up in your conversations with investors. Does it matter?
Absolutely, Amantia. It's a new world out there. By and large, 1990 to 2020, global, integrated, peaceful environment. 2020 to today, fragmented, tense, with fault lines across Iran, US, Israel, Russia, Ukraine, China, Taiwan. Latin America is very far from any of these fault lines. And I think in this day and age, that's an asset. Being in a relatively peaceful neck of the woods, there's not going to be a conflict between Latin American countries, and the region might offer at least partial solutions to many of the global problems.
Yeah, that's interesting. And I mean, like, Latin America also has been, to be fair, in the headlines this year, attached to the words Monroe Doctrine 2.0. Maybe tell us a little bit how the local kind of regional safe havens align with this concept. What does it mean?
Yes, I think there's a glass half full interpretation of the Monroe Doctrine 2.0, as specified by the U.S.'s National Security Document published late 2025. It is about more time and attention by the United States dedicated to the region, more than any we've seen in the last quarter century. And I think that is something that can be used in the region's advantage. You can look at concrete cases such as the one of Argentina, where the country was in fairly dire straits mid-2025, and it got financial assistance from the U.S. Treasury and the U.S. government directly. I think, having an ally in the hemisphere is something that most countries can make for their advantage.
Yeah. And I like the glass half full analogy here. I think we're very much looking for those kinds of opportunities. Risks, I think we'll talk about risk in a second, but other than geopolitics, you mentioned something about what the world needs. Let's dig a little bit in there. What are the domestic kind of environments in these Latin American countries, and how does it tie back to what the world needs?
Yeah, look, I think everybody out there is increasingly focused on building buffers in securing food safety, food security, energy security, technological security, financial security. And Latin America has an answer, at least a partial answer, to all of these global desires and global challenges. You want food? Plenty of it in Latin America. Do you need energy? Many large energy producers are located in the region. Are you concerned about your technological supply chain? Latin America has copper, lithium, stocks of rare earths, critical minerals that empower the technological revolution. And finally, people are thinking about financial security. There's gold coming out of Latin America as well. So once again, if you look at what most decision makers have in mind, Latin America can help them achieve their goals.
Sure.
Now, you were talking about domestic developments as well.
Yeah, I mean, I'm curious how all of this then comes together in the macro and the fundamental outlook across these countries.
Yes, look, the macro backdrop in many emerging markets has been improving. Most countries are well managed with decent growth levels, inflation under control, independent monetary policy, depending on the country, fairly well-run fiscal policy. But when it comes to Latin America specifically, I think we got to point to a political transformation that is ongoing. For the last 15 years, there's been a dominance of left-wing, market-unfriendly political figures in the region. But as of late, we've seen a shift towards center-right, more market-friendly leaders. And I can point you to the examples of Ecuador or Paraguay, Bolivia, Argentina, and Chile as clear illustrations of this trend. 2026 will be marked by very important elections in Peru, in Colombia, and in Brazil that might help sediment this trend, and we might have both politics and policy that are better positioned to take advantage of these global developments.
That's interesting because all of this has come together and paid off in terms of equity market as well as bond market returns. I believe we'll have a chart that really shows how LATAM, the index of LATAM and equities performed 55% returned total, 55% last year, much more than broadly emerging markets. Is it fair to say all of this came together to that last year's return? But tell me more about what happens in the future, of course. Is this sustainable, this kind of growth?
That's right, Amantia. Latin American assets, not just equities, but also currencies and bonds, have been outperforming global peers in 2025 and so far in 2026. We think this performance is sustainable. We believe that looking 12 months out, Latin American assets will continue to deliver because the external backdrop is favorable, as we discussed, because domestic dynamics are supporting the trend, and in addition, you've got valuations that are relatively inexpensive still. You gotta take a step back and remember, investors had almost completely forgotten about the regional assets, right? And this is only starting to change. We see further room to run.
That's great. So the baseline also matters here,
yes,
is what
absolutely.
I'm hearing in another way. That's great. And I mean, clearly, again, to repeat your point around security as a global focus, and that is an area of opportunity for Latin America. That's one point that's kind of sticking with me across energy, food, across the board.
Yes, not going to go away anytime soon.
And I mean, we know this. We see it in our client conversations. We see a lot of focus on Latin America. And with all of this focus, UBS is, of course, very well positioned to guide clients in this. In fact, your team, Alejo, has recently been awarded the recognition of the best chief investment office team in Latin America, according to the 2026 Euromoney Private Banking Awards, which sounds great. Congratulations. Tell us more. What does this mean?
We're very happy about it, Amantia. I think this is simply a recognition of the efforts and the dedication that the team is putting into looking at the region. I'll give you some numbers. In the last 12 months, we put out close to 300 reports that touch on Latin America. We have 70 videos, podcasts, webinars in Spanish, in Portuguese, in English, focusing on Latin America. We cover very actively Brazil, Mexico, Argentina, Chile, Colombia, Peru, Venezuela, the Dominican Republic, and Panama, just to name a few. So we are fully invested, and we want to be at the center of any conversation involving the region.
Phenomenal. And clearly, we could continue this conversation for much longer, but our audience has all of these resources available to them if they reach out to their UBS advisor. So we'll leave it to that for today. To our audience, for more information, please visit ubs.com/views. And make sure to follow UBS on social media, on LinkedIn, Facebook, Instagram, X, and of course, check out our Instagram channel at UBS Trending for UBS Studios content that you cannot find anywhere else. And as always, if you have any questions about your portfolio, please speak with a financial advisor. Until next time, I'm Amantia Mohedini. Have a great rest of the day, and remember to keep your eyes on what's trending.